Winston, Sabrina, and Felix here. And if you're worried what your favorite tech stocks are going to do this coming week, you found the right video for you. We're going to go through the following, and I'm just going to create a watch list out of them. I'm going to click on watch list here in Trade Vision, click create. I'm going to just paste all the tickers in one go. Actually, that was the name. Let's do that again. So this is a Saturday as I'm recording this. This is for the ones for the week, and I'm going to hit enter. And there they are. NVIDIA, Apple, Broadcom, Tesla, Netflix, Palantir, DoorDash, Dell, Autodesk, CoreWeave, SoFi, Ulta, Hut, and American Eagle. We're going to run through these in that order. If you want to get news on those and you're on the beta program, you can get news for those as well. Direct news alerts onto your phone. That's coming shortly for everybody inside Trade Vision. But let's just see what just happened in the AI world after earnings. Is it all over? As Doomberg keeps saying, well, we always want to step back. We always want to be objective. We want to look at the facts first, right? So the first facts we've got here is that we had tremendous volume, so high volume, and we had a stock that sold off for 3 days in a row. That is not good, right? Because lots of people were selling. That's basically what that's saying to you. And we closed the week at, well, not quite the low, but almost the low, certainly the low of Friday there. So what's positive then? Well, what's positive is that that yellow 50-day moving average line there is still above it. 50-day moving average line, that's what that is. We're above the lows of the last bit here, right? So that's kind of your lows. So you got some support here in that sort of 170 zone. We can then also have a look at and see, well, what did market makers do? Well, let's have a look. Let me delete everything. Well, market makers are sitting at 170. That's institutions. They want to buy, or they have to buy, at this green line here called support. Very cryptic, I know. We're going to do something about that. 170, and that's held up for quite a while. So where did they sell? Well, let me show you. They sell at the resistance line of 185. And guess what? That's where they sell. You see the highs? Do you see them? You see them? So what we're seeing here is a perfectly normal sideways movement of a stock that's up 30,000%. So are we worried genuinely about a 5% pullback? No, because we were there on the 22nd of August. We were there on the 20th of August. We were there in early August. We were there in July. We have not sold off meaningfully. And it reminds me of the last set of earnings we had, which were here. What happened? Well, we went up a little bit the next day, 3%. We came back down. Everyone's like, everyone's selling the earnings. And we didn't do anything. And what was it? Well, it was just a little bit of consolidation. And then we broke out of that consolidation, and then we really took off. So to me, the earnings were glorious. Nothing's changed with NVIDIA. I do think right now there are better semiconductor plays to buy. I did a video on that on Thursday if you want to check that out. But it still looks pretty happy. Now, what about moribund Apple? Well, I've been bearish on Apple for some time, and I'll tell you why. Because we sort of dropped below all moving average lines here in March, and we never really recovered. Except we did, and we did it in early August, and we saw this bigly volume coming out here. Well, not a lot of news, but just probably a bit of tariff easing that might have something to do with it. And then what did we do? We came up, we hit the resistance line here at 235. Do you see the resistance line here? It's almost as if these lines matter, right? It's almost as if we can actually use data points to make better decisions. We sold off again, not that much though, and now we're recovering. So we're still above all the moving average lines, and that's pretty positive. Just volume is a little on the low side. But one thing you need to understand with a stock like Apple, you probably have money in a 401k if you're American, right? That money is going into Apple. Nothing you can do about it. It's just going in there. You buy an ETF, you're going to be buying Apple. Pretty much every single ETF in the world has Apple in it. So this passive money just keeps flowing into it. So they don't actually have to do all that much. So what am I looking at here? Well, I would say if we break out above 235, which is that red line here, this would actually be a buy. In my humble book, not necessarily yours, right? And by the way, these support and resistance lines, the only place you can get them is Trade Vision. Yeah, because we build stuff like that, cool stuff like that. And we built it. I'm not plugging some other software. Broadcom, ticker AVGO. Well, did a similar setup, but a little bit of a different timing. So we bounced off here at the top, just below the 320 resistance. We went down. We bounced off the 50-day moving average line there. And that's a good thing, by the way. These retests actually strengthen the market's belief in a stock because we're like, well, everybody bought the dip, right? That's exactly what happened here. And then we went down a bit on Friday because everything went down a bit on Friday for no particular reason. We should probably also mention the tariff thing. So some appeal court has overturned President Trump's ability to set tariffs. That's going to get sent back to the lower authority, and then it's going to get appealed all the way to the Supreme Court undoubtedly. For the moment, some people think that's a good thing and tariffs will just go away. Like, I doubt that. So if this causes a massive Monday rally, I'm not buying that Monday rally, just to let you know, because it's based on, I think, news that isn't going to be news. I'm not saying I know what the outcome is of these tariffs, but one way or another, they're going to put these tariffs back in. Congress could pass a law and set tariffs. That might be one way of doing it. So they'll figure out a way to do that. There is too much money involved in there for them to, I think, walk away from these tariffs now, right? So they're bringing in 30, 40 billion a month or something. They're not giving that up again without any apparent inflation impact. Well, there was a little bit of inflation on Friday, but again, nothing particularly to worry about. So this looks pretty decent, except that what? Let me get a yellow pen, my warning pen. This high and the previous high, what do you notice? You notice that the second one is lower than the previous one? Yeah, that's not great, right? But it's also not the end of the world. We did that here and then we just went sideways a little bit. So it sort of spells consolidation. It spells a tired stock. And sometimes stocks like golden retrievers, they need to snooze, or kittens over there, right? She's very happy to snooze. She's got 5 kittens and she's just like, don't wake them, right? Just don't, whatever you do, don't wake the kittens. I'm very happy they're all sleeping. Love them dearly, but when they're sleeping, it's even nicer. What about Tesla? Well, this is a chart pattern I'm starting to really, really like. And I'm going to get rid of one of these lines here because we don't need it. Always keep things simple. Try to use as few indicators as humanly possible. That's always my advice. What's the positive? Okay, let me think of the positive. You see this high? You see this high? You see that high? What do you see? Well, they're moving higher, aren't they? Well, that's a good thing. What about the lows? Well, what's happening here? They're also moving higher. So the fact that we sold off a bit on Friday is sort of neither here nor there, because stocks do what? Stocks follow the sort of a ziggity-zaggity heartbeat pattern, right? So as long as we keep bouncing off that and we go higher, the uptrend actually continues. There is some resistance though, resistance at 350. You can see that here. That's institutional resistance. And that kind of kicked the stuffings out of the rally on Thursday, Wednesday, Tuesday last week. Not a lot of volume, which is also good because we're coming down 3 days running. But 50-day moving average line is putting up. So this is a consolidation that I would watch. Would I buy it here? Well, the diehard Tesla, I only own one stock, it'll make me a gazillionaire. And I hope it will. I genuinely hope it do. It's just my approach is a bit more diversified. Is that I just can't handle the pain of sitting through something and hoping and praying and wishing that the CEO is, compos mentis or alive, for that matter. So that's why I wouldn't put all my money ever in a stock, no matter how great it is. And Tesla is genuinely one of the greatest companies in the world, I think. And I think Elon is probably the greatest innovator in the world that we have, but still doesn't mean I would put all my money in it. So at the moment, I'm not in Tesla. And I tell you why. We're below these highs, we're below that high, we're below this high, we're below that high. We're in fact hanging around this one here. So there is a ton of what? Resistance, right? Resistance, lots of it above. And we just need to break out of that. So you take this thing above 350, close above 350, and you're going to see me singing a song about Tesla. What about Netflix? Now, what have I got in here? Oh, some record of when I bought stuff. So I obviously bought something and made money on it. Here we go. We bought it here and sold it somewhere up there, I guess, somewhere there, which is lovely. And what happened since I sold? Well, stock did go a little higher, came back down, broke through the 50-day moving average line there. That's a big, big warning sign. And then it went lower, went back above it, but not really meaningfully. It didn't take out the recent highs, and now it's sort of hanging around there. So it's basically like someone sort of skiving school, hanging around by the bike shed, looking for cigarettes. That's sort of Netflix right now, a little exhausted. Doesn't mean it isn't a great business, but at this point, I don't really buy things below that yellow 50-day moving average line. And the support is sort of, 1,200 probably, but we have been lower. So I'm not loving this. This is just one where I would go, yeah, I'll pass. I'll just look at something else. What about something like a Palantir? Does that not look more exciting? Well, Palantir is actually doing better. Every single day, the dip buyers, see there's tails on all these candles. They're really long, right? Really long tails on candles are a good thing. It's what? Well, what it means is that if you have we're going to get a different pen color here. If you have a candle that looks like this, right? What does that mean? Well, the fat bit, are we still allowed to say that? The horizontally challenged bit, the non-Ozempic bit is started here. And then what happened is, well, we went down all the way. We really came crashing down hard. That was the low of the day. And then we bought it all the way back up and we closed there. And that's extraordinary support because you know that at all these levels down here, the dip buyers are buying and that the buyers are strong and there are a lot more buyers than sellers. So actually these kind of candles are very good. And then they're doing that at a very, very important line, the line of all lines, the line that all other lines are jealous of. That's that 50-day moving average line here. That's that yellow line here, right? So we're above it, closed above it for 2, 4, 6, 8 days, which have been somewhat challenging for the whole AI space. So very, very impressive. Now, if you have the same bit of information that I have in front of me here, which is where the resistance line sits at 160, that was also what topped out our highs 3 days in a row. Right? So again, that data point was probably quite useful. But what I do notice is that as we're consolidating, the volume is getting lower. And what does that say to you? It says to me that it's likely to just go sideways for a while. That's what it's saying to me. So again, I'm not loving it. I'm just waiting for a bit more momentum here. We're not seeing that right now. What about DoorDash? Why did that make the popular list? This, by the way, is a stock popular list that Grok came up with, so don't blame me. Right, here's DoorDash. And what do you see on DoorDash? Well, you actually see a similar pattern to what we're seeing on Palantir, funnily enough. And I don't know why this is being discussed so much because it hasn't really done anything all week. But what do you see? Well, it's above that 50-day moving average line, right? So it is doing what? It's tired. Nothing wrong with that. But at this point, it's tired. So I would move swiftly on to somebody else. Like Dell, for example, who dumped pretty hard on very good earnings. Like pretty, very good earnings. And yeah, the market sometimes doesn't make sense like that, which is why we follow the money rather than the news. But when you get a sell-off on volume like that, and you get a great big gap down, and that takes you below the 50-day moving average line, what do you say to that? It's bad news. That's all it is. It's bad news. Okay, so move on. Stop being married to Dell if you're in Dell, and it's bad news. Institutional support sits at 100, which is 20% lower. There is some support here, not a lot, but a little. But I don't like it. Right? Simple. Let's move on. Just don't try to massage a chart to show you what you wanted to say. Autodesk, for some reason, very good earnings. And what happened there? Well, can you see that 2 days in a row of monstrously large volume and a beautiful gap up? And that's a good thing. That's a very good thing, right? So we gapped up. We held onto the gap up on Friday, even though we were actually quite a lot higher at one point. We were at 325, so we did lose a fair bit there on Friday. Bit of a warning there. So the high, that high, which sits at 315. So these glasses don't always make life easier. Sit at about 319. So I'd call it 320. So I would say above 320, this is worth looking at. Right now, just check whether these gaps work out in two ways. Either we now exceed and form new highs, or we come back down. This was just like a bunch of day traders, hedge fund loons or something that did something here. CoreWeave, Again, I'm not entirely sure why this is so popular, but you can see from the tremendous, look at trading volume. What the heck happened there? Obviously something interesting. Some loons speculating on this clearly. We were driving this up, and then the hedge funds were driving it back down, probably trying to make money on both sides of that trade. And then it bottomed out a little bit around here in sort of $90, and we're up a little bit on that. To me, this looks like, I don't like the word manipulation, but to me, this just screams like hedge funds are doing their thing. And unless you're one of those, you're very likely to lose money. And I know people are always like, oh, I made loads of money with this or that or the other. But yeah, most people didn't, right? Most people didn't. They just don't tell you about it because it isn't as fun a story. SoFi, loving SoFi. SoFi made my buy watch list on Monday, actually. And that was a good call. Nice breakout, nice consolidation up here above $25. You know what happens at $25? Anthony Noto gets something like $35 million bonus. Yeah, so he's very, very heavily incentivized to keep the stock price high. And he's doing that, in fairness to him, not through garish news, but actually through delivering on fundamentals. So volume last 3 days is pretty flat. So the upward rally is a little bit boring right now. So again, I would be looking at the next point when we break out of these highs here, sort of 26, 27. That's kind of where I'd be looking at. 27 is where the institutions, the lovelies, the market makers are likely to sell. And then we have Ulta Beauty, talking about beauty. What do you see here, and how do you protect yourself from something like this? We did actually buy it in May, somewhere around here. I don't recall. 13th of May, it says, so it must have been here. Must have been there. I don't have it anymore, so I sold it. But yeah, I went to a nice little consolidation. It broke out again. And then what happens when it breaks out again? Well, you, at some point, say here and there, when you're up here, you want to move your stop up, wherever your stop sits, to the recent, just below the recent low. That's what I would do. Or possibly to the 50-day moving average line. That kind of depends a little bit on your setup and position sizing and so on. So what would have happened if I'd been in on this still? Well, I would have gotten knocked out somewhere here. And yes, I would have given up a little bit of money, which would have made me sad, except it wouldn't have, because if you had the right entry point, you would have made money on it. So the question isn't, do you lose money on an individual stock? It's how much you're losing. And something that breaks through the 50-day moving average line is rarely a good thing. I know it's only one day, but it isn't a good thing. And volume picked up 2 days in a row, 2 red candles up there. So no, it doesn't look good at all. It is not beautiful. Ulta is not beautiful right now. What about HUT? Sort of crypto mining madness, isn't it? Do they have any news? Not that we particularly care, but what's driving the action? I will probably explain it to you. I'm not even going to tell you. I'll tell you why. You can look it up yourself. That's not, I'm hiding it from you. It's just news is overrated. It's much better to look at the actual price action and at the actual, where's the money going, rather than at anything else. So what are we seeing here? Well, do you see the red line? That red line there, that sits at 2650, and that is the institutional resistance. If I could spell resistance, I've made it the resistance. And they're kind of holding us back, right? So they kind of slowed down this breakout, but also volume came down. So the excitement there is a little bit gone. This was a good entry point. And you'd be quite happy right now, because you'd be a few percent up, it's consolidating. Stocks tend not to go up in straight lines, even nutty ones is like this one. Now, funnily enough, I was looking at, actually in my watch list, we're looking at quite a few of these kind of retail stocks. An American Eagle was one of them. I think Ralph Lauren was one of them. You know, a couple of them. Not because I like the clothes or I care what they make, just because of this chart setup. And the chart setup, how does it work? Well, given that you are still here, a bit of bonus knowledge. So charts move in what? Well, they sort of consolidate. Right? They have a breakout. I call it the climbing pattern. And then what do? Well, they consolidate again. So they get tired again at the top. And then either they continue that rally and they break out beyond the tired pattern, or in this case, they collapse downwards, which they typically do much quicker than they go up, by the way. Consolidated again and then did the same thing again, which is why we don't buy consolidation, right? Which is why we set our risk management up so that we exit at the right point. And then it really collapsed nice consolidation down here. But what we're seeing right now is a textbook attempt at a breakout. So we bottomed out down here with the 50-day moving average line. We took out the 150-day moving average line. So that's two things going for it. And we're forming a little bit of a heartbeat pattern here. And I prefer that. Stocks that consolidate for longer tend to have a much, much better breakout. We're waiting, obviously, for earnings. That might be also where we're going sideways. So yeah, some of these are looking really quite tempting. Let me show you Ralph Lauren, for example, as well. Okay, a little bit of a different stage there, but again, it seems to be ripe to break out above its 305 there. So there's quite a few of those. And there's a lot of boring stocks out there that can make us a lot of money. I mean, look at Ralph Lauren. It looks like some sort of AI stock, right? Since 2021, that thing is up 319%. Possibly because I spent so much money there. But what I'm saying to you is, don't just focus on the top couple of tech stocks. There are more sectors to make money out of. And if you spread yourself a little bit more into other sectors, you tend to lower your overall risk a lot. And then on days where the market drops, you don't fear so much because, things are still looking good. I mean, look at our gold miners, for example, here. Look at that, right? On Friday, up 10%, right? That's pretty good stuff, right? So there's a reason we like to be in different sectors at the right times, because it helps us make some really nice returns that are not AI related, are not NVIDIA related, not depending on, Elon's whims or moods or something like that. So just learn a bit more. That's all I'd say to you. There's a free masterclass link down below. Get yourself some decent data, get yourself some decent information, see where the actual resistance is from the market, resistance and support. That's super important, in my humble opinion, from Trade Vision. There's a free trial to that as well. It gives you an app as well. And I think if you're watching, if you got some value out of this, well, share it with a friend and all the best. The stock market is at an all-time high. It closed at 6,500 and a bit for the first time ever. Winston and Sabrina back there are excited. And I want to share with you how we take advantage of the bull market that is to come, which I believe could be far bigger than the one we've just seen. I want to walk you through some